Hi, my name is Khleif, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast. And every week I interview multifamily rock stars, and we talk about how they've built incredible wealth for themselves and their families through multifamily properties. So hit the like and subscribe buttons to get notified every Monday when a new episode comes out. Let's get to it. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I am thrilled that you're here, and you are going to get tremendous value from the gentleman we're interviewing today. Now, he's been on my show before. He's actually one of our mentorship students and our warriors. His name is Steeve Breton. Super nice guy. He's done 9 deals as a general partner, over 1,300 doors, and just a super all-around guy. Welcome to the show, my friend.
Thanks, Rod. Pleasure to be here.
Absolutely. So maybe you can take a minute. I know we talked about this. We've had you on the show before, but a lot's happened since then, and
Right.
Big changes in your life, which I want to dig into because it's just so impressive. But maybe a quick synopsis of how you got started in real estate, and then maybe why you joined our program, and kind of bring us to today, if you don't mind.
Sure. Yeah. So the nickel tour is I was working in corporate IT, had a great job, doing well, climbing the corporate ladder. Everything seemed fine. And then '08 came, and I got wiped out in the stock market. So I started to worry about retirement at that point. And then a couple years later, I was working for a small biotech company at the time. We were taken over by a much larger pharma company. So then I started being concerned about my current job and being able to, feed the family at this moment, never mind, 10, 15, 20 years down the road in retirement. So I had all these things going on in my head, and I thought, I think right around that time, I probably read Rich Dad, Poor Dad, and a few other books that led me down the path of thinking I ought to buy into some real estate just for some stability and, a little bit of hedge against inflation and that sort of thing, because the government was printing money. And so I bought a couple of duplexes, was self-managing, and realized that was really difficult because self-management, takes a lot of time and effort. It wasn't very efficient. And I invested in a passive investment, and the light bulb went off that this whole idea of syndication was the way to go. Because if I did syndication, I can get larger properties. They're more efficient. They don't have to be in my backyard, because Boston was also very expensive.
Boston, yeah, that's where you're from, Boston, right?
In Boston, yeah. Right. So super expensive and difficult to make anything work. Even the duplexes I was buying were, I felt, overpriced at the time, and they've only gone up since then. So I started dabbling in syndication, just trying to figure out how to do it on the cheap, and spinning my wheels there for probably 6 months, 9 months. And then, I learned enough to know that I didn't know enough, and that if I was going to go into this thing and have people invest with me, I better know exactly what I'm doing, because there's way too much at risk. Friends, family, those are generally people's first investors. And I didn't want to put their assets at risk and then have those awkward Thanksgiving if anything ever went wrong. So I signed up for coaching.
Yeah. Awesome. And here we are, 1,300 doors later. Boom.
Yeah.
Love
2.5 years later.
2.5 years. Oh, wow. Fast too.
Yeah, it's gone by quick.
You were one of my first students then, because I haven't been at it that long.
Right.
Oh, that's fantastic. So let's drill down on some stuff. Maybe we could talk about your first larger deal and what happened, and drill down on a little bit, and then I'd like to actually talk about what's happening right now with the the elephant in the room, COVID. So
sure,
but let's talk about how you got going. I'm sure people want to know what you did and the steps you took, and I know that you're very, very good at raising money. So maybe speak to that a little bit, and please take it away. Sure.
Yeah. So at first I started to try to reach out to brokers in other markets, Kansas City, San Antonio, Dallas. And it was a bit of a grind. It's not easy to get their attention, and it takes a long time. I'm not sure if I was impatient or I just recognized that maybe there's another path to it. And so I started to then reach out to the people that were winning the multifamily bids, right? So people that were placing offers and actually getting those offers under contract. And I said to them, you're a very strong operator in your market. if there's anything that you need, how can I be of value to you? And just try to figure out what would my value be? What could I do for them to get a partnership going? And what I started to realize was when people are looking to go from 50 units to 100 units or 100 to 150, perhaps they don't have enough net worth to guarantee the loan. Perhaps they can't raise all of that capital because now they're talking about raising 2 or 3 million instead of the 1 million that they're used to raising. And then in terms of underwriting, I've always been very good with a spreadsheet. So I offered that I would either do underwriting for them or look over all of their underwriting. And then, of course, I would be happy to come down and lead one of the teams in inspections and walking all the units and reading through all the leases, all the things we do during due diligence. Mm-hmm. And eventually, I had a couple of people that were very interested in what I was offering. We started talking, looking at properties, and something clicked. And I think it was probably 6 or 7 months into the coaching program. We had our first deal under contract, 130 units in San Antonio.
Nice.
And the rest is history. That was a C-class asset. We did lots of renovations, and it's gone really well.
That's fantastic. And guys, what I want to flag for you here is you've heard me talk about it time and time again. This business is absolutely a team sport. And, the way that he went at this is a fantastic way to go at it because, I don't know if you heard my interview just a couple of weeks ago where I had 3 guys in their 20s. There was, somewhere $65, $70 million worth of assets between them. And all 3 of them were in partnerships. Now, this happened to be the dynamic I see a lot where you get an analytical person with an outgoing person. And that's not, that may not be the case with Steeve here. But the point is it really is a team sport. And, everybody's got a superpower, and if you focus on and build that superpower and then align for other pieces that you may need, it's an absolute recipe for success. And, the fact that you went out to offer help and instead of trying to get something is also a recipe for success. By the way, guys, if I don't know when you're listening to this, but if you can make it to our virtual boot camp this next weekend, this will go live on Monday, and the boot camp is this weekend. Steeve will be on one of the panels. We'll have somewhere between $2 and $3 billion in assets represented by the panelists. That we'll have 3 panels a day. It's me training for 2 full days. We're not selling anything, so it's multifamilyvirtualbootcamp.com. Or you can text Rod live to 41411. But that's going to be a blast. I've been working on it, and it's going to be awesome. So let's now talk about Steeve. Let's talk about. I know that you've been really good at building relationships and using those relationships, raising equity, bringing money to deals, obviously playing an active role in those deals as well. Mm-hmm. But talk a little bit about how you go about approaching potential investors and, some of the ways you build those relationships, because I know you've been really good at it. Right.
Yeah. So, I'm fairly introverted, or I should say I was. I think I was certainly on that side of the spectrum. And so going out and talking to people about raising capital was not easy for me. Partly, the idea of me joining some coaching was to have somebody encourage me to do these things and to tell me sort of what to say, how to say it, until it became much more comfortable.
Right.
To the point where I remember you saying you have to tell everyone what you do.
Anyone that holds still long enough needs to know what you do.
Right. Yeah. Yeah, and for sure, you get the roll of the eyeball every once in a while at a party or whatever it is, and so okay, I won't talk to this person about real estate, right? We'll talk about sports or something else. But every once in a while, there's somebody who's they didn't just give you their ear and pretend to be interested; they're like deeply interested, and you can tell that they've always wanted to do real estate, and they probably want to diversify their assets, and then they start talking and asking questions and generally what I'll do at that point is I just say, sounds like, you're interested in this. I'd love to talk to you more about it. I don't want to bend your ear for the entire party here. So let's get together for coffee. And then we either exchange cards, or if we know each other well, just simply email them on the following Monday or something. And then it's coffee with a sample package, right? A deal.
Sample deal package. So yeah. And by the way, guys, we give one of those out at the boot camp as well, just FYI. Mm-hmm. Okay.
Yep. So, the very first time I did it, it was just a sample. It was literally, I put together a deal package on a deal that I was trying to do on my own, and the price went too high and the numbers didn't work, but I still used that as my sample.
Nice.
And I just simply said to friends and family, if I found a deal that looks just like this, maybe the pictures will be different because it's a different property, but the numbers will be the same. The structure of how we put it together is the same. Would you be interested?
Yeah.
And, surprisingly, I had a lot of people shake their heads. Yes. I had a friend of mine who practically chased me out of the house with a check.
Yeah.
And I was like, this is not even actually a deal right now.
That's how you do it, guys. It really is. People overthink it, but if you've got an example deal and just say, hey, if I find something like this, are you interested? And wow, you did exactly what I coached you to do, and it worked. So I love it. And so, another thing I want to mention, and again, I'm not going to plug the coaching too much here. If you guys are interested, text CRUSH to 41411 and you can talk to one of my, someone on my massive action team, but then that's CRUSH to 41411. But you talked about being introverted, and part of and this is the last thing I'll talk about, the coaching, I promise. Part of our coaching, our mentorship includes high performance coaching. And I know you still participate in that to this day. Do you feel like that's helped you with, the looking in the mirror at yourself?
I think it's a tremendous asset that I have to be able to join those calls. Again, 2.5 years later, I don't generally join the coaching calls in terms of learning about the real estate piece so much. And I still do on occasion, actually, probably every third call, but these high performance calls, I don't think I've ever missed one.
Right.
I'm always on that call. I love to have that, and it's intimate. It's 5, 6, 7 people, and we really dig in deep about what's holding us back and what makes us happy, and those are amazing. I always feel great leaving that.
Yeah, Socrates said 5,000 or however many thousands of years ago, a life unexamined is a life not worth living. And guys, you've got to be looking in the mirror. You've got to be self-actualizing. You have to be growing and progressing, because if you're not, you're dying. And so it's so critical that you take the time to work on yourself. There's a lot of free content out there on YouTube and the like that you can take in. But it's very, very important that you work on yourself, and it's a lifelong learning process. There's, in fact, I'm just doing a clip on that right now today, actually, and how we are, learners are earners, and we don't stop learning until the day we die. Bottom line. So, love it. So Steve, let's talk for a minute about. So we talked about how you raise equity, talked about how you've approached operators and got invited to partner on deals with them, and that has really springboarded your success. Let's talk a little bit now. Do you self-manage? You don't self-manage at all. It's all third-party property management, correct?
Correct. Yep.
Yes. Yeah. And guys, that's what I tell people. If you listen to my early podcast episodes, you'll maybe think that I'm a proponent for self-management, which I think at some point that I am. You get enough scale, you bring it in-house if it geographically permits. But you should not be dealing with residents when you're in acquisition mode, and the incredible opportunities that are coming right around the corner. And they are coming, guys. You need to be focused on finding deals. In fact, I just told my team we need to get on all the, really start watching the auction websites, because those are going to start getting filled up with deals. I'm telling you, that's coming. And I know it's sad. We're going through this crisis right now. And, I heard Jay Abraham use the expression ethical opportunism. And I think that's how you approach this. You keep your integrity intact, and you look for deals and you capitalize on them. And I know if you guys have listened to my podcast enough, you'll start to see a trend. And that is the guys with thousands of doors started in 9, 10, and 11. And so, I call that a clue. So let's talk about what you're doing on your assets right now, how you're managing, doing the asset management and managing the third-party property management partners. And that's what we call them, is there are partners in the property. How are you managing those through this crisis?
Yeah. So, generally it's a week or once a week call with each of the property management companies. And you just go over kind of vacancies, marketing, rehab, the status on sort of your basic metrics. Mm-hmm. And that's, those are pretty ho-hum. Usually things are going pretty well and they're humming along, and you just kind of course correct as you go. Mm-hmm. When this thing hit, it was like, let's talk every day, every other day, until we all got our heads around what does this thing actually mean? And I think it's calmed down quite a bit now. We're back to pretty much on a weekly basis now doing our calls. But it was very active before that. So, of course it was, let's close down the pools, the clubhouse. How do we do everything virtual so we don't have to have people coming into the office? Sign up the stragglers who hadn't gone to auto pay via their bank accounts rather than coming in and handing us cash or a check.
Did you make it so that they can lease units virtually as well?
Yeah. So now we have virtual tours. Everything's online.
Yeah.
Yeah. And then from a maintenance perspective, we said we're going to halt all maintenance requests. Like, we received your request, we have it, we're absolutely committed to getting this thing done. But unless it's an emergency, we don't want to come in and put you at risk by coming into your apartment. And we also don't want our staff to be put at risk either. Right. If it's an emergency, they'll go in. They've got the full.
Oh,
gear
sure.
now.
I mean, if there's water running and
Sure.
and flooding, or God forbid, something worse, then okay, that's the same thing we did. Good.
Yeah.
And what did you do proactively with your residents in anticipation of financial disruption?
We almost immediately allowed them to pay via credit card, and we waived the fees for credit cards, right? So we figured if they don't have the cash immediately, at least they can pay. And generally, we don't take credit card payment. So that helped. What else? We called, I think we did this on every one of my properties. We called or contacted each of the residents to try to get a sense of, are they still employed at the same place that they said they were on their application?
Right. That you have to update that stuff, and now would be the time, right, to find out where they're at.
Yeah. And so, if that's a restaurant, if they're a waiter or a bartender, something that's likely to be closed down, are they still going to be able to pay rents? And what's their thinking? And are they already applying for government assistance? And if they haven't done that, we're providing all the links, and whether it's federal or state level.
Yeah, let me expand on that, guys. And we talked about this previously, but a good asset manager and property management company will provide every possible resource available in that specific submarket to their residents. Rental assistance, both governmental and private, anything that will help the residents get through this.
Right.
So you did all that as well then. Good.
Yep. And even, understanding where all the local food pantries are. And,
food
that
banks,
sort of thing. So they can get all the resources.
I will tell you, I just gave $5,000 to our local one here because they're sucking wind right now because so many people need help.
Right.
And hopefully things, this is being recorded on April 25th, and hopefully things, are going to ease up in May, and we'll start seeing some relaxing on this, and people not fearful to go and have food at a restaurant, so these restaurants can recover, and these other public facing businesses can recover.
Yeah. Hey, just one thing on that, Rod. I'm on the board of directors for my local food bank.
Oh, nice.
And there's a lot of people kind of pouring money in right now, which is fantastic because we really need it. But we fear that at some point that's going to slow down. And then, people are still going to need this for a long time. And we're not going to be able to have our usual events. We usually have an auction event, like a gala. We have.
You mean fundraising events? Yeah.
Yeah. So we're not going to be able to pull all these people together and show them a good time and then have them, do their usual contributions. And that's a massive part of our funding. So anybody out there, just please support your local organizations.
Yes, for sure, guys. There are going to be so many people that need food, and so no, that's a really good point, because a lot of these organizations will have these galas. I know there's one here locally, a Florida Wine Fest, and they usually donate a few $1,000s to my charity, and of course that's not happening. So we're getting impacted as well with my Tiny Hands Foundation.
Right.
And so, it's going to be tight for a while, guys. And so it's time to give. It's time to give. You give till it hurts, because whatever you give, you receive back 10 to 100-fold. I've seen that dynamic time and time again in my own life, and I'm sure you have as well, Steve. Yes.
Yep. Absolutely. Yep. And I had a Facebook post out there. I said, now, this was early on in this whole COVID thing. I said, now that you've hoarded all the toilet paper and completely filled your pantry, it's time to help others.
Oh, I like it. Yeah, no kidding. It's so important. And Yeah, it's let's not lose sight of, there are some people that even, the ones that aren't, for example, internet savvy, that don't know how to go in and apply for unemployment, that you can't get through on the phones. And these are people that have no money coming in. My wife had to help some of her family members get the unemployment going because they had no idea how to do it. They can't spell the word computer. And there's a lot of people like that out there. And so it's a lot of people are going to need help. So think about how you can do that, and while we're on the topic, those of you that are struggling, if any of you are struggling, be thinking about how you can pivot and innovate and maybe change what you're doing or use this time to learn a skill, multifamily, for example, if that's what you want to do. But again, whatever it is, don't squander this time. If you're not working, you don't be stuck to Netflix. Use this to learn and grow and become more. And because it is an opportunity in that regard. Some of the most successful companies in the world were formed during crisis like this. But remember this, guys, with crisis always comes opportunity. And there are definitely opportunities coming in the real estate space. So Steve, let's talk about, now, is it just you? Do you have a team? I mean, I know you're partnered on some deals, but as it relates to your core nucleus, do you have anybody that you work with, real tightly, or is it these individual operators? Or tell me a little about your structure.
Yeah. So, what I was used to, it was in the corporate world, I was a program manager and I had multiple project managers working for me, and they each had many multi-million-dollar projects. So I managed at the milestone metrics level. I managed all the budgets and just ensured that things were on track. And I've kind of applied that the same way because I was working in my corporate job for so long while I was building this business on the side. It was literally my side hustle. And the way I was able to do that was to leverage these other operators and leverage their operations. If they've got a CPA that they want to use that they've already feel comfortable with, great. If they have a property management company that they want to use, fantastic.
Fantastic strategy.
Yeah. And I just insert myself in there and I say, okay, what exactly can I do to help you? Can I write all of our investor communications for all of us? Can I, look at properties? Can I do your underwriting for you? And so just leveraging their structure, but at the same time, I was able to keep working full time in my regular job. They had no idea I was doing this on the side. And what I really wanted was for them to be shocked when I left. And they were, right? They were completely surprised because I had put all the value in that I was supposed to as a full-time employee.
You mean at your core job?
At my core job.
Yeah. Yep. And you retired when?
Gave notice in June of 2019.
2019.
Almost a year
you retired. Now. Because your income from your investments has eclipsed what was a high-paying job before. Yes?
Yeah.
And so let's talk about that a little bit, actually. Let's talk about what it's like to build enough of an asset base that's paying you enough so that you can retire. The good and the bad, I guess, if there's any bad.
Yeah, so it's interesting. I always looked at it as I have to replace my W-2 income before I can leave the job.
Right.
And I hadn't really dug into it. And for an analytical guy, surprisingly, I haven't dug into it very deeply when I first started in the coaching program. And I just knew I had to make a lot more in real estate in order to leave my job.
Right.
And that was enough for me to take the massive action necessary and to be coachable and to do all the things that I was supposed to do.
Right.
I followed the plan and it all started to come. But at some point, I think, my goal was 2020, sometime in 2020. Mm-hmm. In the back of my head, it was always like, by the end of 2020, right? That's what I told myself. Right. And then in December of 2018, I was doing my goals for the year, and I started to analyze the numbers a bit more. And I said, well, if I do this full time, I'm now a real estate professional from a tax perspective. Right. So I can take all the real estate benefits there from my
tax benefits,
passive losses. Mm-hmm. So if you're taking a couple $100,000 in passive losses, that's a lot of money that you don't actually have to earn. And then I looked at just a couple of duplexes that I still owned. Those were cash flowing. I never even considered the extra money I had already built in my side hustle before I even started the syndication piece. Mm. So I started to add these things together and realized that I was really close by the end of 2018 So it was really, 2 years of, or not even 2 years of coaching at that point, in taking this action that I needed to take before I was thinking to myself, I think I can do this in 2019.
Yeah.
And then I did another deal, maybe 2 deals in 2019 by June. And I finally just said, this is it. Like, I'm done.
Yeah.
I knew that I had earned at least enough to replace what I have already. And by focusing on this business, I was going to be able to eclipse it.
Love it. Love it. Love it. Love it. Awesome story. So now you're working it full time, and having a lot more time with the family. You've got a family. You've got kids. How many children do you have?
So I have 3 boys.
3 boys. Yeah.
2 in high school, 1 in college now.
Nice. So let me ask you a question. Why do you think people maybe think about doing this and don't take action? And what would you tell someone? In fact, let's do that as 2 separate questions. Let's start with the first one. What would you tell someone that's listening that knows they want more out of life? They want to do what you did, create a side hustle with a family, with kids, and get to where you are, where they can retire from their core job. What would you say to them?
I mean, the most important thing is to be an example. So, just telling them what my journey was, and I did have to make a lot of sacrifices.
Yes.
And I can list them all off. I don't want to bore people, but made a lot of sacrifices. I stopped coaching my kids. I stopped playing hockey at night. I did nothing but this business, nights and weekends for
2 years,
year and a half, 2 years before I was really, able to leave my job. But then the other side of that, the flip side is, now when I sit down to work, the day flies by. It literally like a snap of the fingers, and it's already 4:00, and I'm thinking, well, I better go down and start making dinner and just hang out with my wife, right? I don't work. When we say full time, I'm working 30 hours a week. Unless I'm in the middle of a big deal or in the middle of COVID or whatever. But and those hours are whenever I want them to be. I don't have to get on the highway and drive into Boston and deal with the commute. So it's so worth the sacrifice. I think that's probably the most important thing to let people know.
And guys, there is going to be some sacrifice. I mean, to get anything, you have to get uncomfortable, and you have to push yourself, and you have to give up some, maybe some Netflix and things of that nature to make this happen. What roadblocks would you tell people they should watch out for?
The one thing that comes up pretty much without fail at some point in coaching, whether it's the first day or a couple weeks in, a couple months in, there's going to be some limiting beliefs where people just start talking about how they can't do something, or they don't think it's possible, or whatever it is. And it's just kind of holding the mirror up to them and saying, here's what you're telling me. Do you really believe this? Right? I mean, look at me. I'm not special. I don't have this crazy IQ. I just went out and did the hard work and got it done. Absolutely no reason why you can't do the same thing. But having the ability to kind of recognize what that limiting belief is and then dealing with it. Right? But if you don't even know you have it, how are you going to deal with it?
Many people don't, and you need to consciously think about it. Limiting beliefs can be, I'm not smart enough. I'm too old. I'm too young. I'm not analytical enough. I'm not outgoing enough. I don't have enough energy, whatever it is. And for most people, they're stories, honestly. They're limiting beliefs, yes, and or stories. And if they're a limiting belief, I would let me give you some coaching on that really quick. If you have one of these, pull it out in the daylight. Mine was, I'm not good enough, or how can I show them I'm good enough? And when you pull it out in the daylight and you look at it with your adult rational mind, you recognize that it's BS. There's a reason the acronym for belief systems is BS, because 99% of them are. And so, but when you look at them rationally and you recognize that they're BS, they start to diminish. And if you do it consciously enough, they will go away. But the operative word is consciously. You have to pull them out. You don't let them go by. You think about them consciously, and they will diminish and go away. I used to be an introvert as well, big time. And now I'm in front of thousands of people a year. Well, I was before COVID, in front of thousands of people a year. But the other thing is make sure that it's not a story that you're telling yourself either. People use stories as circuit breakers so they don't get disgusted with themselves. And don't let yourself off the hook. If you're not happy with something, don't justify it with a story, because you're never going to grow. You agree, Steve?
Absolutely. Yeah. My limiting belief before I joined coaching, the number one thing was, I have a family to feed, right? I can't be doing this real estate thing on the side when I've got a family to feed. I have to be able to keep my job. I was so sort of small-minded and
Interesting.
fear-based about, leaving the job. Can I ever retire? Can't put any of that at risk. And it all changed as soon as I joined coaching and started to realize that this is what was holding me back.
Nice. Let me ask you a question, because we're all leaders here, and anyone that's going to go and do this, and right now the world needs leaders more than ever with this crisis we're going through. What's one characteristic do you think every leader should possess?
I think you may have asked me this when I was on the podcast like a year and a half ago.
All right. Well, let's hear it.
Answer hasn't changed. It's integrity.
Integrity. That's our number one core value. I love it. Love it. Love it. Love it. What do you think's the best advice that you've gotten about this business, or overarching theme, or quote, or something that has just really impacted your success or impacted your drive? Take that any way you want.
Yeah. There was so much, right? I've joined a mastermind group, or actually two. So I get these things nonstop coming at me. I'm surrounding myself with the right people, so
Positive
I hear the
stuff.
right things, right?
Yeah.
But really early on, one person said, only do fat deals. And, I was like, of course, I only want to do the deals that are going to bring me the most money. But it's so hard to do that when the market, as of January, February this year, was super hot, really hard to get deals under contract that make any sense. So it's easy to start making shortcuts in your underwriting and making assumptions that are more aggressive because you just want to get a deal done, especially when you're first starting off.
Yes.
And now with this whole crisis hitting, I really understand the value of that statement of only do fat deals, because now I'm looking back, we're running break-even analysis on all of our properties. We did it before we bought them, but we're doing it again now. So, here's where we are in our execution of our business plan. Some of them are only a few months in, some of them are years in. And at this moment, how are we cash flowing? What's our break even? How bad can it get with COVID and job losses and everything before we have an issue?
Right.
And I'm feeling pretty darn good about all of our properties because I took that advice.
Yep. Same here. It's big operating reserves and low loan to value and lower break evens than the norm. Most of ours, we can go 65% vacant and still break even. So, and guys, especially right now, be ultra conservative. That's the bottom line. If you write that word down, conservative, especially right now, because it's likely to get worse before it gets better. Hopefully it'll be short term, but I think these next few months is going to be more painful than this last month, honestly, until until the ship gets righted. So, before it was finding the deal, I think moving forward, it's going to be more around finding the money. What do you think about that?
That's certainly true right now because everyone's fearful of the economy and the impact to their own savings, their ability to the same feelings I had before I did this, right? The ability to hold down a job and all of that sort of thing. I think everyone's feeling that crunch right now. And just like a lot of us were feeling it shortly after, 08, 9, et cetera.
Sure.
But I think like the 2008, 2009 issues, we're going to see people flooding to private equity here in maybe a year or two. I'm not sure how long it's going to take. But eventually, we're already, I think it's a $5 trillion market, this private equity space where we deal with private real estate assets that we're taking down. So, I can't imagine a world where that doesn't increase after all of this. People are going to have a hard time getting any kind of yield in the stock market, I think, for a while, because those companies are going to be suffering. This economic impact isn't over in a year or two when the virus goes away.
Agreed.
So I think that's going to be a long-term trend. I think just the disruption, even with China, they're talking about potentially another Cold War, but now it's with China, and it's not just the U.S., it's the whole world.
Oh, yeah.
So there's going to be a lot of stuff happening where people are, the stock market's going to fluctuate every time somebody sneezes, but in our real estate assets, nothing happens when someone sneezes.
Plug along. I mean, you guys know the reason I started this podcast, if you didn't listen to my early episodes, was to share my experience losing $50 million in 2008 and the discovery that my multifamily did just fine. It would have survived if I hadn't cross-collateralized it, to save a few basis points on interest rate. And so, I still have those apartment complexes. And so that I wanted to get that message out there. And that's the main reason I started my podcast. So, shift gears for a second, because I know you've got boys in your life. If you could teach school children something that they're not getting, what might you teach them?
Anything to do with basic financial management.
Yeah.
I mean, I actually having a conversation with a friend of mine. She wanted to put together a course on this. So I've been kind of feeding her some videos and some ideas that I've shared with my kids along the way. But yeah, it's just, basic budgeting, understanding that you can't spend more than you make, investing in yourself, which is just a massive lesson for people to learn. And I think, a good piece of that is investing in how to manage your own finances. Don't leave it up to somebody else. Understand how this stuff works.
No, I couldn't agree more. So, is there anything I haven't asked you? Anything you'd like to expand on? I mean, you've added a ton of value. Let me ask you this. What do you love the most about this business?
I love the partnerships and the friendships, actually. It's been really amazing to see. So in the corporate world, it's, everybody is fighting to get the promotion, fighting to get a raise. And a lot of that is trying to make other people look bad so that you look better. Mm-hmm. Right, which is it's just a horrible place to be. And I don't think every job is that way.
A lot are. I hate to say it, especially in larger organizations. Yeah,
but it is a competition.
Yeah,
and when you come into the multifamily space, of course, we're competing for multifamily assets, and there's a lot of times we know the buyer that got the deal that you were after. Mm-hmm. But at the same time, it's a very small world. People are very friendly.
Small world. Yes.
Yep. Yeah, and your reputation matters a lot. Mm-hmm. So for the most part, people know that, and they try to do the right thing, and they're just really good people. Yeah, and always sharing. And then the idea of partnerships. If a deal is too big for one person, or even for a small group, you might get a phone call because they know, like, and trust you, and they say, "Hey, let's work on this thing together." It's just so much fun looking at all those possibilities together.
Yeah, and in fact, even in the Warrior group, I mean, we bought 1,000 doors with our students last year, and I know you've raised money in there and partnered and aligned in there. So mm-hmm. And that's the kind of environment you want to look for and or create where you can align with people and because like I said, with these larger deals, you have to have a net worth equal to the loan amount. You have to have liquidity equal to about 10% of the loan amount. And so mm-hmm. very, very often you have to pull multiple people together to satisfy that. And then, there are different pieces of buying and asset managing one of these assets that require different personalities and different skill sets, and that's why this business is so fun. So I'm really glad you brought that up. And well, listen, brother, thank you.
The ideas too, Rod. That when you pull all these people together, everyone has different ideas and perspectives, mm-hmm. and some people are more aggressive or conservative in different areas of the business. So whenever there's an issue, or even just in your underwriting at first, should we think that we're going to raise rents this much and why? And just having those discussions, having some smart people to bounce those off of, super important. So from that perspective, I love the partnership too. Yeah,
agreed. You need to have people to bounce things off of. It's so critical. And mm-hmm. so you want to be around people that are doing this. I'll actually announce it here right now. We're pretty close to ramping a national online meetup organization. So that's going to be really cool. And that'll be an environment where people can meet digitally and build relationships. So kind of excited that's happening. But anyway, thanks for being on the show, my friend. I appreciate you coming on, and thanks for all the value you added.
Yeah, this was great. Hopefully I'll see you in person again soon.
Yeah, wouldn't that be something? Well, I'll see you like this on our live stream next weekend. But anyway, take care, buddy.
All right. Take care, Rod.